Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Khalaf, CEO of Nasdaq-listed Marqeta, to discuss the state of payments and why the opportunity in Fintech has only gotten bigger. It's great to have you with us, Simon. Welcome to TradeTalks.
Thank you, Jill, for having me and having Marqeta on.
You got it. And give us some background about Marqeta.
Yeah, absolutely. Marqeta started as a modern card issuer, and now we're focused more on the embedded finance opportunity.
Let's talk about embedded finance before we get into the state of payments. What are some of the trends that you're seeing? How is it disrupting the traditional banking model?
Yeah, it's very interesting, Jill. As we launch our survey in the US, the UK, and Australia, I'd say that the financial services industry is at a crosspoint. As the experience becomes more digital, and as I'd say the new generation kind of gets into the financial services, the expectation of that generation is for banking to be a digital product first. And also their expectation is for financial services is to come from the brands they love and adore. So not necessarily the banking brands. That doesn't mean banks are going to go away. Absolutely not. And they're on the contrary, they're going to be pervasive, but they're going to be sitting behind the brands that consumers love.
Let's talk about the state of payments for a moment here. How much of US mobile wallet users feel that they're confident enough to leave their wallets at home and only rely on their phones for payment?
It's actually a fascinating number. It has gone up. It's 3/4 of the US population that actually feels comfortable to leave their household, to leave the house at home without actually a physical wallet and just relying on their phone. That is a very interesting statistic. It changes the way we think about the cards that are in our pocket, because most of the time, you are limited by the physical space you have. No one wants to carry 40 cards. And for me, I look at it in my physical wallet, I have about 6 cards. But if I look at my digital wallet, I have 48 cards. So I think the loyalty is going to shift from a few cards to a brand or a co-brand, because you can have you can have an infinite number of cards technically on your phone.
And how much of US mobile wallet users have made a purchase via a retailer's embedded mobile app versus using a card?
It's about 95%, so it's almost saturation. So we can say almost everybody, which is a very interesting number.
Well, I mean, I really think that is interesting, because if you think about Gen Z, even Gen Alpha, right? This might be the only physical banking tool that they'll ever use if everything is technically embedded finance. I mean, 95%, to your point, is nearly full saturation.
Absolutely. My daughter is 13, and honestly, I don't believe she's ever going to touch a piece of plastic, and she's never actually going to enter a bank. So you're waking up to a generation, and that generation is actually going to go to work, and they're only going to think about a mobile device as their interface to banking services, for payments, for all kinds of banking services.
Let's talk about accelerate wage access. What is Marqeta doing in this area?
Yeah, I mean, before getting into what we're doing, let's talk about the problem. I mean, we keep talking about the new generation and how they want to work whenever they want to work, and kind of like the gig economy and the shift economy. Well, it turns out that it's 83 million Americans that are shift and gig workers, and close to 60% of the US population lives paycheck to paycheck. So, and when you look at interest rates on cards, now reaching 20% APR, if not 24% APR, and inflation is at 7%, then 30 to 34%, let's call it, almost a third of what you earn if you are in debt actually is wasted. So what's the purpose of waiting 2 weeks in order to get your money if you've already finished a shift or gig? So if we pay you immediately, let's say you finished the shift, or you finished delivering something, and you swipe and you immediately get paid, then we have reduced the chances that you are going to go and take a loan or put money on your credit cards and avoid those penalizing APR fees. So That's when we introduce accelerated wage access with a lot of our partners so that shift and gig workers get paid immediately when they finish their shift. And this way, they rely less on penalizing credit cards for their day-to-day living expenses.
I would imagine the users feel more economically safe and more stable as well versus having to wait and spread out finances or miss payments with that 2-week lag.
Absolutely, Jill. You're absolutely right. I mean, the nice thing here with the solution Marqeta introduced, that everybody wins. The employer is winning because you're actually not moving the money from the balance sheet of the employer until their employees start spending. And the employees are actually extremely happy because they see their wages hit their card immediately after they finish a wage. And you're absolutely right. They feel safe, they feel taken care of. And also the retailers win and the service providers win because they get access to that capital. So it is actually the win-win-win. And all what we're doing here is making the money instantly available to the people who deserve it. So this is not debt. You're not taking any risk because the service has been provided.
All right, Simon, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you for having me, Marqeta, Jill.